So hey, Steve and Jamie, what's going on?
Well, hello everybody. What's going on there, Steve?
Hello. What's going on? A lot of rain's going on a Monday.
Yeah, it seems like rain's all over the place. Rain and big time snow and, well, all that good stuff. In any case, it's always bright and sunny in trading land, right?
Yeah, always, always.
Well, everybody, hey, welcome to the second office hours of 2019. I got my trusty wingman, Steve Gomez, here. So let's just get into the fun stuff here. But before we do that, I want to take a brief moment to make the lawyers sleep a little easier at night. Just want to make everybody aware of the fact that all of the information that we present in this webinar here today or any of our other weekly webinars is for educational purposes only. If you do need investment advice, when to buy, when to sell, what to buy, what to sell, please seek out a registered investment advisor or some other licensed individual like a Series 7 stockbroker that can legally help you with that buy and sell advice, because all of this information is for educational purposes only. Now, being the beginning of the new year, we always have a nice influx of new users, so you regular attendees, please bear with us while we give the new people a little bit of information about what we have going on in the TI community, not just the award-winning, one-of-a-kind software with artificial intelligence, but the community that we've built and fostered around that technology. All kind of starts up here in the upper left with the Traders Room, hosted by Mr. Barry Anderson. Barry opens up the room 30 minutes before every open and keeps it open all during the trading day, and showcases the way that he uses trade ideas technology along with showing you the trades that he's making as well. So if you haven't been taking advantage of that resource, by all means you should be, because it's free. If you've shopped around trading rooms on the web, you know that most of them, worth their salt anyway, are not free, but when you're part of the TI community, this is another asset that's available to you. Actually, Barry was in one of the biggest winners I've seen in a long time today. We'll give that one a little peek when we get into the content here. Of course, today's Monday. You get myself and Steve. Steve takes the helm on Tuesdays for the trade of the week, which is tomorrow. I'm pretty certain, well, I'm skipping ahead a little bit here. Q&A demo on Wednesdays. Hump Day rolls around. We like to change it up just a little bit. We bring in Dan Mergen, the CEO and founder of Trade Ideas, along with Brad Williams, our Chief Technical Officer. Always interesting and entertaining on Wednesdays. Now, on the 5 o'clock webinars, we round out those on Thursdays with Andy's Trading Studio. Andy takes the helm and I ride shotgun with him, and then we like to do something completely different on Fridays. The ever popular and ever growing Friday support webinar, starting at 11 a.m. and going until 2 p.m. Eastern, assuming the crowd is there. And by the looks of last Friday, the crowd is only getting bigger. Had a record crowd in there last Friday. So keep on coming to the Friday support webinar, anything TI related. You get myself, Steve, Andy, and Sean in there, so you get 4 heads attacking the problem at one time. Great place to learn and get your questions answered. Now, those are the 5 o'clock webinars. Here we have TI University, which is running Monday through Thursday. And these classes begin at 12 p.m. Eastern, Monday through Thursday. Beginners 101, which was today. We've got Tuesday 201s, Wednesday for 301s, and Thursdays, which is the class that I teach, on, 401 on Thursdays. So this, coupled with the other 5 webinars, we're doing about 9 webinars a week here. So anytime that you feel like getting a refresher course, 101, 201, 301, we do recommend that you take these in order, because you'll need what you learn in 101 to build on 201, and so forth and so on. So everything from the beginner to the advanced in our webinar showcase. Always like to show how Trade Ideas and our subscriber base has been impacted by the introduction of AI. Of course, the first AI, Holly 1.0, who we affectionately call the Holy Grail, introduced at the very beginning of 2016. And we can see here how our user base has increased in the form of new accounts, up and away. And of course, in the meantime, we've introduced Holly 2.0 and Holly Neo. So now we have 3 AI modules, and we have additional ones in development. But good to see people, crowds, the investment community responding to what we're doing here with AI. All right, well, Steve, here we are at the top of the itinerary here. So time for yield market recap.
Okay.
If you're ready, I'll kick it on over to you here.
I'm ready. I've just unfortunately lost my pen. Windows decided to take my pen away from me, or actually
My pen.
the virus, the Windows virus, antivirus decided to take it away. I have to restart my computer to get it back. So I'm flying without my pen today. I was getting really used to that thing too. Oh well.
Was it a cursed pen? If you marked up the chart, the stock would automatically go there?
I think Windows updated, and then maybe it didn't transfer. Who knows? Whatever. So here we are, looking at these 4 ETFs I'm going to look at, and I think you know the rubber has met the road, and we can see that in each particular chart as I go through. The market has impressed me. It's been rather constructive. I mean, we very well could have rolled over right on this red dripping bar right there and retested lows, but we didn't. And I saw something like this back in 1998, during a big giant correction with a V bottom. And I remember imprinting on this as a brand new trader, thinking, well, that's interesting, because this could go on to grind higher. I don't know, but this is the same kind of a corrective V bottom that we had back in '98, and if price tends to repeat itself, it certainly might do that if the path of least resistance remains higher. So speaking of that path, this orange line is the same line I was talking about last week. It corresponds to pretty much these 2 lows over here and a couple of candles, kind of an eyeballed pivot line that I haven't made really any adjustments to, and the price came right up into that line and has been going sideways, kind of as expected. So this is the real line in the sand. Again, on the constructive side, the moving averages are curling back up. The 10 has curled and crossed back above the 20. And most importantly, the price action is sitting above the 10 and the 20. So we still have 2 ominous elements here. One would be the 50-day moving average just above this pivot level. But to me, this pivot level is the most important thing going across all the ETFs we're going to look at here. If we can get the bulls, that would be if the bulls can get a close of at least 1 or 2 days above this orange line going forward in the next few days or next week, that's going to be very constructive. And I think as these moving averages come up to collect the price action here, it's going to force the issue. So we're very close to a possible resolution. Right now, it's still a guess. Is the market going to roll back over and test these recent lows, or are we going to sideways grind, which is very constructive, and then break above and start to be moving higher? And in the scheme of things, again, a 20% correction, well, a 10% is a typical correction by definition, but we had 20%, a bear market for about a day and a half, and then we've bounced back out of that bear market territory. So this was a very significant correction. It's definitely enough to reset all the pins, so to speak, and let the markets react to what's happening and coming down the pike, moving forward on our economy and interest rate policy and things like that. So I'll be watching this sideways grind and then see what happens in the next day or two when these moving averages catch up. If we go to the Qs, it's a little different story. They are leading, but still acting as a proper pivot point should. We had a close 1, 2, 3, 4 today, 5 days of close above that pivot, but it's acting like a pivot because the prior resistance and support becomes support again. The low of last Thursday and the low of today tapped on the downside of that orange line, which I haven't moved really in the last 10, 12 days. These are the lines I've been looking at. So the NASDAQ is got a bit more bounce or buoyancy in the recovery, but a constructive chart over there for sure with the closes above. Now all it has to do is figure out what it's going to do with this declining 50-day moving average coming into it. IWM, the Russell 2000, is hitting its line and then just kind of grinding sideways through it. For the last couple of days, it's just been stuck at its respective pivot line. Prior support becomes current resistance. And then lastly, the Dow DIA Diamonds ETF looks very similar to the S&P, grinding sideways underneath that moving out that pivot line. So that's really the story of the day. I'm looking at these pivot lines to see exactly, the price action. A good 3 or 4 days of sideways action is extremely constructive compared to pulling back in price. So we just have to kind of wait and see. So in the meantime, the order of the day, and Jamie will discuss this, since the backdrop of the market is a sideways grind, There's really no directional bias to pick. So we remain in kind of a risk-off mode for those that are addicted to trading and want to be in something at all times. That seems to be where we are. Before I pass it back to Jamie, the trade of the week is NVIDIA. Well, speaking of grinding higher, before I do that, X has been grinding sideways, and that was last week's trade of the week. Same thing's going on here, guys. As soon as that moving average comes up, maybe tomorrow, I would expect in the next day or 2 or 3 to see some sort of resolution in this sideways grind. And I thought it was funny to mention this morning, NVIDIA is the trade of the week right now. As of this morning, funny, it's always fun to come in Monday morning and get the first thing of the day as a kind of a trade of the week troll. I don't see a Michael in here. Is Michael in here? Michael, are you the one that wrote me this morning? Let's take a look. No, I don't see the right Michael. So the email said, scratching my eyes and getting my coffee, and the first thing I read is, well, you know, a lawsuit just started with them, and you're calling them the pick of the week. And all caps, really? You like my impression, Jamie? I've never met the guy, but
I do. You know how many times NVIDIA's been sued? I mean, you know.
So my reply was, yeah, that's our trade of the week. You know, you don't have to trade it if you don't like it, but we look at charts and we don't really concern what people think might happen. And that's kind of the lesson I'm going to talk about tomorrow for sure in our webinar. Back here on the lows of the chart, this is when the lawsuit came out. So apparently at 125, the lawsuit was coming out, and now we're at 150. So, you know, the footprints in the sand, the herd doesn't really seem to care about a lawsuit. And when you consider that NVIDIA has had pretty much a 50% haircut from 300 down to 150, I think the price is pretty much built in. But all I have to do is look at the the price action here to see this is about as solid as a base as you could deliver. A nice test of lows here on that news, I might add. And now we've just been kind of grinding higher, and here we are again. Same thing. Moving averages are crossing. The price is above the moving average. Looks like it could be ready for a possible change in trend. And this company does have some solid fundamentals. But the point being, I don't care what people think about lawsuits or what people on with a tie on CNBC think. You know, half the time they could be looking to be sitting on the bid down here buying this thing, and they're on CNBC saying, well, we're really concerned about the lawsuit in NVIDIA. I mean, this is kind of how the world works, guys. So the point in me bringing this up is price action pays. Everything else is complete nonsense and noise. You just got to study what the herd in the sand, the footprints in the sand from the herd is telling you. And that's it. All right. With that said, I'll give that back to you, Jamie.
Yeah, good stuff. And, you know, heck, I mean, NVIDIA, ATI, all these big tech firms, they've always got many open lawsuits. I mean, that's just part of the game, some patent disagreement or whatever. But as you said, Steve, none of that really matters because you're just looking at it's a purely technical play. And of course, hey, how many people do you think shorted NVIDIA when that news came out?
In the hole, I might add, yes, which is another lovely type of trading strategy, short in the oversold conditions and get bounced out after the news. Sell the rumor, buy the news. Well, it's the opposite in this case.
Right. I don't know why my chart just got so big. Let me shrink it up. But yeah, as Steve was pointing out, in the hole down here, at all-time lows, always a very dangerous spot to get short. So if you ever do that, you better have tight risk management. Okay, all right. So thank you very much, Steve, for that. Always entertaining. So, man, you know, when we're establishing a range, as you can see right here, I mean, well, we know what neighborhood we're in. We're in the land of the small range, right? Until we bust up or bust out. The potential is, well, for lack of a better term, limited, right? So expectations coming into the session today were pretty, you know, hey, well, if we stay in here, there's going to be some upside, some downside, but, you know, as you can see here, what do? We gap down. We try to make it back up to closing. Barely missed it, and then cycled back down, gave up about half of what the move up was today. So not a whole lot going on in the market as a whole. The plays were out there today, but man, you sure had to look hard and you had to be very, very selective. Let's just take a peek here at what the major tracking ETFs turned in for volume today. I mean, look at SPY finishing the day at 0.52 of normal relative volume. IWM was the only thing close to normal, but barely. The Qs, the SPY, and the Dow. I mean, look at the Dow at only 0.35. So I think that you could call today a low volume day. And when we start going over the plays and Holly risk on, pretty much everything is confirming what the charts were already telling us today in the volume. You know, if we look at the Holly trio, 44 cents on 18 trades. Yeah, you know, by the way, we're doing some testing. Pretty much took all the Holly trades today and was pretty much maybe down just a smidge, with a little bit of commission sprinkled on top. So nothing to write home about today. But for those of us who have been watching Holly for years already, some nice opportunity was out there. But if you didn't take it, or if you weren't minding your P's and Q's, you know, it didn't stick around for very long. And even some of the ones that ran all day, boy, they sure barfed it up in the past 15 minutes of them, in the last 15 minutes of the market. And I'll show you a couple of examples of that. Before we get into the Holly stuff, I did want to point out one of the stocks that was traded in the room by Barry and crew today, because you just don't see this very often. Especially shocking because of today and the market conditions. But here we have MBOT. We always talk about the benefits of being in the trading room, the fact that it's free, the fact that it's Barry in there, who's, you know, a great moderator of the trading room, along with a handful of other people in there that have, you know, kind of gained senior status that people look up to in there. But if you were in the trading room today, you probably heard Barry getting long MBOT before the market opened. And you can see the pre-market activity today before the open this morning. Here's where the little guy closed as of Friday. What do we have? A close of 240. Started chopping around here right at...
Was the little guy? The little guy.
Well, no, this little guy, MBOT.
Yeah, I know.
Yeah, not Barry.
No. You call him MBOT. No, I knew that. I was just laughing. You're referring to a stock as this little guy.
Right. But it's because of price, right?
Got it.
It's a little guy. I think Sean would, of course, well, we all know how Sean feels about low dollar stocks to begin with. But, you know, little guy closed here, started chopping around the pre-market, and boy, look at this. I mean, look at all the opportunity there. You know, pre-market is, well, we can just say that this is not the pre-market of yesteryear. A lot more activity seems to be going on in the pre-market here lately. But just looking at this little guy right here, you see, now, Steve, you put it in my head. I keep saying it over and over.
That's what my point was.
This little piggy. In any case, we all know that one of my favorite patterns is the range break due to its simplicity. Well, we can use pre-market range breaks here, but the bottom line is this. Barry was all over this one today. Now, how much did he take out of it? I don't know, but he was in it. And, you know, look at this crazy freaking run that this thing made today. I mean, from basically an open of, what do we got here, 454, and just hit 1150 in the pre-market. For a slow day, boy, this was a gift served up on a silver platter, a la Barry in the trading room. So just kind of wanted to point that one out. If you were in that one today, good job. But hey, what better reason to start attending the trading room? MBOT was definitely the flavor of the day. So for those of you who were in it, congratulations. And if you're not in the trading room, a better reason to get in there. Okay, so expectations. Well, we already kind of had a little bit of expectations, just kind of knowing what neighborhood we were in here coming into today as we grind along sideways here. Didn't break the lows or the highs. Well, we did it the previous day, so it wasn't an inside day, but nowhere near getting outside of the range there. Now, what did my compare count windows tell me after the first 15 minutes today? Well, we did have some pretty significant downside bias, but when you're dealing with a range this tight, well, no fireworks until it gets either out or breaks below. So what I did notice today is a lot more quality short setups than upside potential. Now, is that a direct correlation according to this window? I don't know. Just like any other study or metric, when we're in a range like this, everything gets a little less, well, what's, for lack of a better term here, accurate, useful, whatever you'd like to call it there. So we did have more selling on the big cap stocks in the first 15 minutes with high volume than we did buying. Now, kind of makes sense because when we go over the plays that I'm going to show you, a lot of them finished with relative volume significantly over 1. But when we look at the overall market, not the case. So I do believe that based on what I saw today, a lot of the higher volume stuff was on the sell side. So let's talk about Holly. Once again, we've kind of recapped here what the overall results were. Barely up on 18 trades, but there were certainly some risk on and not really a whole lot of trade arounds to be had today, but there was definitely some risk on money to be had here. Let's just take a look at little BMY here, which was produced by Holly 1.0. Get an entry signal right here. And this is one of the ones that we get a little upside push, but wanted to kind of play around at the entry line. Looks like the 10 period was kind of tapping it down here. We regressed back to the entry line. Let's see, once, twice, 3 times, 4 times, danced around the entry line before we finally caught some traction here, had a nice close above the 10 period, and that was really what guided this BMY higher the rest of the day. Good news is, got a little bit red, but never really got down to the stop area, so we're able to stay in that one most of the day. Then it just became about when you were going to exit. But after the close of this bar here, we got the 10 period acting as that nice guiding hand here. And towards the close in the last 15 minutes, this one, just like a lot of other ones, you know, we got a nice ride here, and then boom, in that last 15 minutes, boom. But once again, keep in mind, whether it's a Holly trade or any other momentum type play, what do we have here? We had relative volume of 1.61. All right. What we're going to see here is indicative of a lot of stocks in the last 15 minutes. Boom. Didn't even have the chance to close a little bar under that 10 period moving average, just whoosh in the last 15 minutes. Reminds me a lot of this guy right here, NBEV. Holly signal right here. Nice lift. Sticking to that 10 period moving average, but then in the last 15 minutes, without any rhyme or reason, if you weren't quick on your toes here and protecting that money, boy, you got a nice haircut on what you were up. So, you know, this seems to be pretty much the case for a lot of stocks today, whether they were Holly plays or some ones that came from your other tickers. Now let's take a look at one of the shorts that Holly spit out. Delphi, man, I really like the look of this one. Of course, we got the wick back here, kind of screwing things up, but hey, happens. Really nice entry signal here, and one of the ones that, you know, keeping in mind these are 15-minute candles here, 1, 2, 3, 4, 5, 6, 7, 8, almost for 2 hours, hugging that entry line here before it finally releases a little bit further down. But this is one of the ones that if you are monitoring them, you did have a nice opportunity to potentially press this position here because, you know, even though it's not going our way immediately, a nice sideways consolidation, it's not necessarily a bad thing. So once these bars start to develop, we can quickly identify, well, if it breaks through here on pretty decent volume, I'm already in a couple 100 shares with Holly, nice clean range break, perfect opportunity to press that position, and you would have been rewarded quite nicely. Delphi also finishing the day on higher than normal volume. Very important, becomes a lot more important on a day where we're seeing volumes like this on the overall major tracking ETFs. I see a question. Somebody's asking when's the next test drive, and Steve, correct me if I'm wrong, but I think it's around the first part of February since the annual meeting is coming up pretty soon. Scott might want to correct me, or I tell you what, Scott will give everybody the lowdown when he walks us out here. We'll nail down that date.
I believe it's the 4th of February, Monday.
Right. I knew it was in the first week.
Hmm?
Okay, so yeah, there we go. All right, what else do we have here? Shillix, risk on, not near as much as what we saw in the DLPH. Holly takes a whopping 8 cents out of it, finishes up 18 cents. Of course, I've added my max profit column here, which I've been forgetting to do a lot here lately. But we can see Holly was up a maximum of 26 cents, probably right here at this level right here, before we ebbed and flowed, and kind of, a lot of stocks today were just ebbing and flowing around these entry lines. So, kind of reminds me of the old days of trading when we'd focus on one stock. For those of you who like to be very active, I mean, up and down from this entry line, probably could have scalped this thing all day. But the bottom line is, Holly eats a 2-cent loop. Oops, I'm sorry, I got off the wrong one there. Shillix. Holly locks in 8 cents, up a max of 26. So you see there's about a 3x difference in there. 2x here on risk on, 3x while we're in the trade. So if you're not watching the max profit column, it can be quite eye-opening. And of course, the way we add columns, right-click, columns, all the columns that you have access to are right over here. Just push them over to the left and they become active. If you ever want to get rid of a column, you just push it back over here to the right. So that's pretty much it for, the way that everybody closed on risk on. We did have a little bit beefier totals before. It looks like just about everything pulled back there at the close. Don't really see a whole lot of anything else to cover here as far as going risk on with Holly. It's just kind of a scratch day. Last Monday was a huge day in the market and for Holly. Today, not the case. Tomorrow's Tuesday. We got 4 more days, and usually 1 day a week minimum is one of the more active days. So we did not get that day today. Nice range-bound day in this tight little range that the market is developing. So will the big day be tomorrow, Wednesday, Thursday, Friday? There's no guarantee there'll be one decent trading day a week, but that's the way it's been shaping up as of late. So we'll see what happens moving forward. All right. Testing continues. Just to give everybody a little word on how the testing for Brokerage Plus is going. We've got some advanced functionality that just got delivered to us today. We had a few issues that we had to deal with internally here today. So the people that were supposed to be testing the new feature, which by the way is what we are calling the re-entry feature, all right? Which a little blurb about that before we move on to some of the other manual trades that were that I identified today. When you see risk on, right, and you see, for example, this stock, NFX, Holly gets out for an 18-cent loser, but if you would have stayed in it, you'd be up 9 cents, right? Now, it's more prevalent on a stop. So let's take a look at YGYI. This one stopped out pretty quickly today. We get the entry signal here, and then whoosh, in the same 15-minute candle, and probably even the same 5 or 1 minute candle, that trade was stopped out. So what is a second entry? You might be asking yourself. Well, a lot of the times they'll stop out, and then they'll come back up and hit the entry again, and then off to the races. How many times have you seen this happen to you on a manual trade? They get you out, boom, shake the trees. This one never made it back up there. So in essence, if we were running second entries on Holly, this one would have never triggered, right? Because it never made it back up to the entry line. But on the ones that do stop out, then they hit that signal again, and then they go the second time. Sometimes it's the third time. That functionality hopefully will be tested tomorrow, because that's part of the package that we have to get smoothed out as far as functionality goes before we release the ability for the clients to auto trade Holly. So just kind of want to give you guys a little peek at what's going to be tested next. We're still on schedule for the late January release, hopefully early February, of the automation module for Holly. All right, so let's talk about bread and butter scanners. Whether it's myself, Steve, Andy, or Sean, we all have our favorite windows and our favorite setups that we like to try and find each and every trading day in addition to watching Holly. For me, it's my turbo ups and downs. I've got two different sets of these. I've got the original versions, and then I've got the turbo up, no resistance, and no support, which are relatively dead for now. Had a bunch of very low cap stocks cycling through those tickers today, and they all looked like pretty much garbage. So I'm not even going to go into detail about any of the things on there because it's just simply not worth it. So when this is happening, mainly due to the fact of where we are in the markets, you know, we're not seeing a whole lot of things come down or show up that have all-time highs, and we're certainly not seeing a lot of stocks that are at all-time lows or all-time highs. So all the good plays are technically range-bound when we're talking about the daily. So we had to go to the regular versions of turbo up and down today, and just like always, some good trades in there. You just had to be a lot more patient, a lot more selective today. But there was some quality in there. And I've selected a few here that pretty much could be taken right out of the ebook that myself, Sean, and Andy, and Steve wrote. And we'll talk about these and talk about the simplicity and, you know, what your risk is versus your reward. But all the ones we're about to take a peek at came out of the original turbo up and down. So let's talk about the longs first because, as I said earlier, we're going to look at 3 longs here that were pretty pristine as far as the timing goes. But then again, there were 1, 2, 3, 4, 5, 6 shorts. Is there a rhyme or reason to that? Well, going back to what I said earlier, it looks like a lot of these plays I'm about to show you, the volume was above normal, whereas it was not on the markets. Volume is not the holy grail, but it can be the equalizer, especially on days like today. So first on the list here, yeah, Stuart, why didn't Holly catch the MBOT surge? You know, I'm sure, you know, even I asked myself that initially today, but MBOT was a unique thing, and it just so happens that none of the strategies that Holly looks at found this today because, well, and I'm glad you asked that question because it reminds me to reiterate, Holly is a statistical model based on statistical probability, right? We notice correlations with the patterns of the statistically viable entries that Holly spits out because that's what our eyes and brain make us do. But the simple answer is that MBOT didn't show up on any of Holly's strategies today. And typically the only 2 strategies that show up that have the lower price stocks, or what I should say is little guys, is Mighty Mouse, and what's the other one, Steve, that has the small stocks? Can't remember off the top of my head.
Little big guy. Little guy.
Yeah, little big guy, and Mighty Mouse. And I'm pretty sure those guys didn't make an appearance today, and if they did, there were no trades from the little guys today. Oh yeah, that sounds like something Matt Az would have been all over today. Okay, so let's take a look at some of these that the turbo breaks up produced. And once again, we're looking for range breaks here. And we're looking for nice, tight, pristine ones, right? Now, turbo breaks up uses new high. We're also asking for accelerated volume on the 1 minute time frame. So that as we see things like RYAAY today coming across right here, and these are 15-minute candles, so we had plenty of time for a pattern to develop here. 1, 2, 3, 4, 5, 6, 7, almost 2 hours, about 1 hour and 45 minutes in. Get the tick, RYAAY hitting a new high. We can see that it's just cracking that threshold there. So really, technically, anywhere in this candle would have been a great entry here. And then we just get immediate lift. Boom, boom, boom. Off to the races. Now, how do we ascertain our risk when we're playing a range break like this on these 15-minute candles? A pretty good go-to is using the prior 15-minute candles low as your stop loss. So that's why this area right here, corresponding with the low of that prior 15-minute candle, is the risk area, and reward all the way at the top here. So we've got a nice juicy reward area based on risk. Looks like to the tune of about maybe 3 or a little bit higher. So that's what you want to look for. Now, simple pattern. That's why I love these guys so much. So if you don't see it here, and then, maybe you were eating a sandwich, fielding a phone call, whatever, you were distracted, then you look over and you see RYAAY hitting a new high up here. Well, you missed the boat. The train pulled out of the station, right? This would be way chasey. And you might get lucky and chase something and get rewarded, but overall, in the long term, chasing is a bad thing, right? Missed money, always better than lost money. In other words, it's easy to get FOMO, fear of missing out. Well, I missed it here, but maybe it'll go. This one went, but don't play the chase game. If you miss it, you miss it. Wait for the next one. All right, so a really tight one there. And, you know, for the nature of the day, there were some nice clean breaks today. SNA, another one. Nice little consolidation period for quite a while. Easy to define. We get the pop right here. SNA hitting highs. Once again, anywhere in this candle would have been a really nice entry. Prior 15-minute low right here. So we've got a nice risk area and a bigger reward area. Nice and clean. Of course, this guy doing the same thing as most everything else today, whether it was the last 15 minutes or the last hour. As soon as this 10-period SMA was violated, never did recover. So, you know, when we're playing these, this can act as the guiding hand. It can also act as a area in which you can take your profits as well. And the last along, SHG, more of the same. Not quite as pretty as far as the consolidation goes, but it's the high that we're looking at, right? This one expended a little bit more energy, but it got so tied up in here that when we got the hit right here, this was our prior 15-minute risk, right? Talk about low risk, but this is one that worked very nicely with minimal risk. You know, this is the exception, not the norm. But prior 15-minute low right here did not get violated. So on this second little bull flaggy type pattern right here, corresponding and lining up with the prior high, we get a nice break, and it works superbly here, staying above that 10-period SMA pretty much most of the day. Check out what it finished relative volume, 3. I mean, that's significant on any day, but on a day where we're turning in overall volumes on the tracking ETFs like this, that's quite defined. So let's just back it up here. Let's see, SNA also finished the day at 1.46. RYAEY finishing almost at 3 as well. So once again, these patterns are a dime a dozen, but if we focus on the ones where the volume is pumping, even on a day like today, we get some good moves, some clean moves, and these weren't really, you know, pull your hair out type trades, right? So those are 3 of the higher quality ones on the long side today. Now let's take a look at some of the downside action. And you're going to notice, hey, these patterns look the same except inverted. And in the ebook, I mean, you could forget which stocks I've listed as illustrations in the ebook, but they pretty much look exactly like this. Just flip the pattern upside down. We get a nice opening red candle kind of showing, hey, there's big sellers in here. Buyers and sellers become equal for this length of time here. We get the nice clean break. Looks very similar to some of the upside plays. You could have taken the bottom of that candle and been perfectly fine.
Jamie, you got yourself
Steve,
on mute. There you go. You
how long did that happen?
I don't. 5 seconds. You're good.
Okay, I don't know how that happened.
I don't even. You're good. 5 seconds.
I'm glad you caught it. So in any case, once again, a nice clean pattern, really in line with the risk here on the ED. What did ED have on relative volume today? 1.68. So once again, to backtrack here, these windows don't even have relative volume as part of the configuration. We're just asking for the accelerated 1-minute volume on the of 3 times or higher as the penetration of the lower the high is occurring, right? Now, a lot of times though, they're going to be exhibiting high relative volume as well. So just keep that in mind. All right, what do we have next? We have this guy here, TME. Opening candle up here, little downturn, little sideways action here. Boom, we get a release right here. Now, of course, you wouldn't want to be too chasey here. Stick to as close to that level as you can. But once again, even if you took the bottom of this candle, trade still would have worked. Got the prior 15-minute candle up here, risk, very small risk area, nice fat juicy reward area here. This is probably the only one that I'm going to point out that had lower than normal volume. Of course, didn't seem to affect it today. It still worked, but only 0.49, still kicking out 4.3 million shares. And as we continue down this list, you're going to see pattern of quality of pattern get a little bit dicier here, just due to the nature of the day. SGen, we came down here and put in a low right here, a little sideways action. Not a very pretty chart, but just pointing out the fact that it still worked. If we took it coming through this level right here, prior 15-minute, probably would have had to put it a little outside there because you can barely see. Well, give me my cursor back here. Well, it won't let me grab my line for some reason there. But basically, that's this little dojiest candle right there. But we hugged it, never got back above it. So that is a viable stop loss area there. Once again, small risk area, considerably larger reward area. Not near as pretty as the prior two, but hey, that's the nature of the beast. Price action trumps everything else, and even though it's not quite as pretty, it still worked. Gave you some nice opportunity to exit with something green on the blotter there. Let's take a look at another one here. HHC. This guy comes in second, other than the previous one that I just showed you, coming in at 0.49. This was the next lowest value, 1.0 here. A little bit shorter of a reward time period before bouncing back up. So this one didn't give you much time to react, but we did get a nice movement down before this fierce little bounce and back up. Let's see here, Sabre. Pretty decent here. It looks like the inverse of one of the longs that we saw earlier. Nice little stair-step action here. And usually you don't, you want to see as little energy expenditure as possible. But this one was so, I guess, orderly, right, that we're focusing on the prior 15-minute high right here. Take it coming through here. Never even acts like it's going to throw a wiggle. And so, once again, price action trumps everything else. We get a nice little downturn here. Small risk, bigger reward. Lastly, Newmont Mining. What do we have here? We had 1, 2, 3, 4. A nice little hour of up and down here before this break occurred with higher than normal volume. Boy, this guy was kicking it today. Finished the day at 5.91. Pretty big for a day where volume was low. So we get a nice clean break here. Risk is right here, prior 15-minute high. And at the lows here, this was our reward area. So all in all, in my opinion, it was easier to find short setups today. If you focused on the ones where the volume was pumping, you had a pretty good shake at getting some green on the blotter today. Now, that reminds me, let's just cruise back over to MBOT because, boy, that thing had some obscene relative volume numbers, and it looks like it closed the day, keeping with the obscenity here. Relative volume, 462. Of course, with only 2.4 million shares in the float flipped over approximately 12 times today. If we just round this up to 36 million. Wow. The float flipped over about 12 times today. That's pretty incredible. You don't see that very often. So all in all, a pretty boring day, but some good upside potential, some good downside potential if you were, keeping things tight. So let's see here. What am I missing? And I do believe that's about all I got today, ladies and gentlemen. So Holly, scratch day. Manual tickers, a lot of them dried up. So going back to the basics with turbo up and turbo down, looking for those nice clean range breaks. Still was rewarded with some nice quality setups here. So that's about all I got, Steve. Unless you have something to add, we can bring Scott in and let him walk us out, give everybody the latest coupon codes, and maybe give a little blurb about the test drive that's coming up here.
All right, thanks. Yeah, a couple items on the way out. Yeah, you should have a copy of our ebook that both Steve and Jamie contributed chapters on. It's been very timely this year. We should do an update for 2019 sometime soon. It's 5 ways to win in a post-BTFD market. Get it now. It's free. Go to trade-ideas.com/ebook and plug in your email address. There's a podcast. We put up the first new episode of the year on Friday. If you didn't get that, make sure you subscribe to Trade Ideas Podcast by searching for Trade Ideas Podcast wherever you listen to your podcasts and add it as a subscription. Also, check out some of the previous episodes. We've got good guests on and all that good stuff. You can scroll through the descriptions of the older episodes and check those out. There's a discount code that's good this month. New Office, all caps, takes 15% off any subscription your first month or year. Also, you can use this to upgrade from standard to premium if you're inclined to do so. I know they mentioned the test drive that will be coming up in February, and you'll start to get notifications about that next week. Any questions, email us, info@trade-ideas.com. Shoot an email to info@trade-ideas.com. That goes into our help desk software. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. And the Facebook page to like is Trade Ideas Pro to share all that stuff with your friends. We'll have a recording of this up later on tonight or tomorrow. And stay tuned to your email address for a link for an email from GoToWebinar with a reminder about how to find that playlist. Thanks, everyone. Thanks, Jamie. Thanks, Steve.
All right, see you tomorrow.
Thanks. Thank you very much. Hey, and real quick here before we conclude, I mistyped that response to Dean. Dean was asking about turbo brakes up and down. Dean, real quick here, if you go to channel 4 from the channel bar, that's where you'll find those windows along with Steve, Andy, and Sean's favorite scanners as well. All right, everybody. Thanks for attending. Steve, Scott, we'll see you tomorrow. Bye-bye.
Thanks, y'all.